Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, August 6th, 2008. Well, the markets ticked higher today, led mostly by the Nasdaq off of some Cisco earnings that we touched on yesterday and told you that most likely the Nasdaq would react positively to those earnings, and that is exactly what happened today. We also had some news of a $20 billion possible buyback on Microsoft, which also buoyed technology to lead the markets higher today, up 1.22% on the Nasdaq, or 28.5 points. The Dow and the S&P kind of had a pause day to slightly positive, so you really had a pause day aside from the tech-laden Nasdaq, which, you saw the Dow trading up about 40 points today, which is a flat day on the Dow as far as I'm concerned, and the S&P up about 4 points, which also was about a flat day, both up about 0.3%, give or take. So what we did see today was a couple odds and ends. Number one, on the Nasdaq, we talked yesterday, and I'm going to show you the chart, about a possibility that the Nasdaq would come and hit and pierce the 50 moving average on the daily. That did happen today, and we also filled a key gap on the Nasdaq, and I'll show you that on the chart. We're going to talk about what was running today, what was working today in the markets. We're going to talk about what didn't work today. We're going to talk about the technicals. You guys know we're fixated on the technicals, as that's what's been working for us, and obviously it's how we've been able to call the market's major and minor market moves over the last year and a half to 2 years at this stage. So let's get right into it. What I want to touch on first is the intraday market activity. Now let's flip over to the intraday chart on the ES, and you can see for the most part it was another light volume day. You had a light volume consolidation day. Indexes, as I mentioned, slightly on the positive side, aside from the Nasdaq, which led things to the upside by over 1%. Now you can see that the market just drifted higher here most of the day. Really, here's the open in the market. Let's go back to 9:30 right here. You can see you had an initial little bit of a sell, but the market for the most part drifted up all day, and you can draw a trend line basically through the center of these, and you can see it was above for a while, then came back below, and then rallied again above it, and then into the close you just had a little bit of profit taking here, right down to that 20 moving average, and that's not surprising. Those that are with us in the chat room, and by the way, I do encourage you all to come join the chat room, as it's one of the best learning experiences to become a technical-minded investor, trader, or swing trader, whatever you prefer to do. As I always mention, everything works on all time frames that we do, so when we're talking and analyzing all day long, you can apply it to any time frame. We answer all questions about stocks, indexes, commodities, currencies, you name it. So in any case, what you can see by today's activity, and what we're going to talk about, is that really now the Nasdaq, up about 100 points over the last couple days, is nearing an area where you can probably expect some consolidation pullback. Alright, a little bit. We're not talking about a major pullback. We do think that the market has more in the tank in the near term, but you have to have a little bit of a pullback pause, some sort of pullback in this market to take a little profits off the table before we resume another push to the upside. So let's take a look at the daily SPY here, and we'll flip over to that daily chart. And what you can see here is that the market here on the S&P, or the SPY, is really at a resistance point. And you can see it's a really triple top. Possible W formation is a maybe. We'll have to analyze that a little more. It's not too clear yet. What we want to see first is, do we break above this line? If you break above this line, and we did test it today, but we did not break above it, then you have an easy move on the SPY to this 50 moving average, which you guys can probably see on your video right here. Alright, now that's the number one area. So number one, let's just talk about near-term resistance. This is it. Right here, we're on it on the SPY. Absolutely, we're on that near-term resistance point. Should we break through that, the next key resistance, which is going to be quite substantial, and it's where we would definitely suggest taking profits if we get there, and that's if you didn't take them today. I mean, in all fairness, the two-day move we've had now is tremendous, but if you're not taking them at this point, I personally would be looking to take them right around this point on the 50 moving average. Now on the downside support, well, obviously the 20 moving average, we'll talk about that, which is right around here. You can see it curve all the way through. That's the downside. So my point here is, and it's all about odds and how much risk to reward, right? When you're a trader, that's what you're focusing on. Risk to reward, back and forth. All right, so your reward here, if we break through, is this much. Your risk, this much. Which one at this stage of the game, and that's our point here, is that, yeah, we do possibly see a little bit more upside in this market. That's possible, but now you're talking about a pullback in the market, which could go as low as here, all right? Now, ideally, and this is the ideal situation on speculation, is that you start to form a bullish consolidation flag, something like this. You get a sideways move, slightly down in pattern. You count it out according to what our webinar states, and those of you will be having another webinar when our new website launches in a couple weeks, and it'll be just top of the line as always. But you'll learn all these counts and the time values, the price, the pattern, and this is why we've been able to be so accurate, because we've been putting together 5 to basically 10 different analysis techniques, which are half proprietary, half regular, and by combining all of these, you're able to really get an accurate picture, and that's really why we were able to know about the possible move yesterday that we had called for as a possibility. We had 5 of 7 indicators talking about a move there, and obviously that's pretty good, although we do like to see 6 of 7 at least, to be close to 100% sure it's going to happen. Now, in any case, that's the ideal situation, is a consolidation pattern, but the downside risk still on some negative news could be back to this 20 moving average, no doubt about that. Alright, still consider this, alright, you still have light volume in this market. You did have a pickup in volume the last couple days, a little bit, based on the rally, and that's a good sign. Obviously, the pullback was one indicator we were looking at for right here, and match that right up, alright? It doesn't take a lot to match that up. The pullback here, light volume pullback, then you have a little, that's just telling you right there, as you see the volume on the up green candles was much stronger. So that's number 1 right there. There were a bunch of other ones we went over in yesterday's video. You can look back at yesterday's video and see. But as of now, you have to anticipate some consolidation pullback in the market as risk rewards favoring that. There's a small chance we do pop to this level right here, but at this stage, ideally, we want to see a consolidation or a pullback. Alright, now let's take a look at the Nasdaq. Nasdaq we talked about yesterday as being a good probability off of Cisco earnings, and it turned out Microsoft had some positive tech news as well, that it was going to pierce this 50 moving average, and that's exactly what it did today. The Nasdaq up 28.5 points, which is a very strong move. And at this stage, you've now had a nice move up on the Nasdaq. I mean, this is a powerful move, almost 100 points in the last 2 days, and you're piercing a key resistance area. In addition, let's draw a line from the gap fill. Here's the gap on the chart. You all can see this gap area right here. Let's draw it right there across. What point does that bring us to? How perfect is that? So you pierced the gap, but you pulled back and closed right at the gap fill area on the chart. So that's number 1 resistance you're seeing on the Nasdaq. Now, the other thing I want to point out is, let's take the low of this other resistance point right here. See this resistance point here? This pivot right in the market? Let's take that right there and draw it right across. And where does that come to? Basically the high of that candle, that little tail to the upside, touch that area. So you can see how it pushed through that gap fill area a little higher, but right to this resistance point, then it was able to pull back to the gap fill area to a T, which is right in there as well. And that just shows you how, if you can read these charts properly, you can really understand where the market will most likely go. And it's never 100%, but all you're trying to do is put the odds in your favor. Like, we always try to do 85-90% odds in our favor, and if you can do that, you're going to be a profitable trader. Alright, these talking heads on TV that are all about fundamentals. Fundamentals, frankly, don't mean a whole lot in a bear market. In a bull market, yeah, it's undervalued, everything's running, of course it's going to go. In a bear market, look at some of the stocks. I mean, you talk about fundamentals on these Goldman Sachs or Merrill Lynch. Merrill Lynch trading at, $80 a year ago, for less than a year ago, and the fundamentals technically supported that. Well, guess what? Not so much anymore. Because fundamentals are all lagging. It's all what the quarter was last quarter. It was all about what it did last quarter, earnings, revenues. It's not projecting. The technicals project about where the market will go or the stock will go in the future. And that's the beauty of the technicals. It helps you find the leading indicator, the leading edge of the market. So in any case, just flipping back to the Nasdaq, guys, keep a watch on this. These are the areas of resistance on the upside on the Nasdaq. If you do start to pull back, the downside, obviously back to the 20 moving average, worst case scenario, would be a major support area. What we would like to see is consolidation sideways to slightly down, hugging this 50 moving average, or slightly lower. Even slightly lower is fine. You get a signal like that, and the proper count dictates on price pattern and time here, and we could be looking at another move up in the Nasdaq in the not too distant future. So let's kind of watch that. All right, now again, that's up to speculation which one we get. Ideally we want to see the sideways move, because that dictates that we do see what we expect, which would be another move up in the not too distant future. But you could have a little negative news and a stronger pullback. That's not out of the question after such a massive move up in this market. Alright, now let's talk about stocks that moved today, because the refiners finally got a bid. And in the chat room, we've been pumping these for days and days. And here's Valero up $2.35 today. Excuse me, $2.33. Sunoco, just a monstrous move here. Look at this pattern. First of all, in Sunoco, a big move up, Look at the bull flag pattern right into the 50 moving average and the blast off today. It had earnings after the bell. It's actually trading up another $1.50 after the bell today on earnings. And these stocks, it's a no-brainer in my point. All right, look at the USO. This is the oil fund, and look at, here's where oil was at the highs, and now it's pulled back. Valero or Sunoco. All right, when oil was trading at 100 and, basically back at 120, way back here, Valero was valued at $50. Now oil is back at that same level, and Valero's trading at 30 odd change. So just from the fact of that, we could isolate it and assume that it was going to bounce. So the refiners had a beautiful move the last couple days. They should consolidate or maybe move a little higher and then consolidate. But nonetheless, just the idea, look at the bottom formation here. Nice little bottom pattern formation, and you're breaking up today. Sunoco, again, just looking back at the Sunoco chart, unbelievable. You also have stocks like FTO. Look at this breakup after this bottom formation. And oil dropping is good for the refiners because it's a demand issue and the crack spread and so forth. Alright guys, come join the chat room. Awesome chat room. Come join the Swing Trade Alerts. We'll be back tomorrow and see what the market does. Take care. Have a wonderful evening. Take care.